Imagine waking up one morning to soaring fuel prices, empty store shelves, rising unemployment, and a global economy struggling to breathe. Now imagine that all of it begins in one narrow waterway. The Strait of Hormuz isn't just a shipping route. It is one of the world's most important energy corridors. Even if diplomatic progress reduces immediate tensions, many economists believe the economic effects could last for years. Could this become the defining financial challenge of our generation? Let's find out why this waterway matters. Every day, a significant share of the world's oil and energy exports travels through the Strait of Hormuz. When this route faces disruption, the impact doesn't stop in the Middle East. Factories in Asia, businesses in Europe, consumers in North America, families across Africa and Latin America. Everyone can feel the consequences. Energy powers transportation, manufacturing, agriculture, hospitals, and nearly every modern industry. When energy slows, economies slow. The invisible crisis. Many people think only about oil prices, but economists warn the bigger problem is supply chains. Modern economies depend on chemicals, fertilizers, industrial materials, and thousands of components moving continuously across global trade networks. If these supplies remain disrupted for months, production becomes increasingly difficult. Factories reduce output. Construction slows. Food production becomes more expensive. Transportation costs rise. This creates a chain reaction that spreads across the global economy. Markets can be misleading. Financial markets often celebrate positive political headlines. Stock prices may rise because investors expect future stability. But economists caution that stock markets do not always reflect conditions in the real economy. The real economy depends on factories producing goods, workers earning income, farms growing food, and energy reaching businesses. If physical production weakens, economic growth can remain under pressure even while markets appear optimistic. The global debt challenge. Another major concern is debt. Governments, companies, and households all depend on stable economic activity. When businesses cannot produce normally, their revenues decline. Yet loan payments continue. If enough companies struggle at the same time, financial stress spreads through banks, investors, and international markets. High debt levels can turn a temporary disruption into a much larger economic slowdown. Is the global financial system changing? The discussion also raises questions about the future of the US dollar. For decades, the dollar has played a central role in international trade. However, some countries are exploring alternative payment systems and currency arrangements. This does not necessarily mean the dollar will lose its leading position soon, but it could signal gradual changes in how global trade is conducted over the coming years. Lessons from history. History reminds us that economic crises rarely result from one single event. Instead, they often emerge when multiple pressures combine. Energy disruptions, supply chain problems, heavy debt, falling business confidence, reduced investment. When these forces interact, recovery becomes much more difficult. Some economists compare today's risks to earlier periods of severe global economic stress, not because history repeats exactly, but because complex systems can become increasingly fragile. The road ahead. The future is not predetermined. Diplomacy, international cooperation, diversified energy sources, stronger supply chains, and sound economic policies can all reduce long-term risks. Businesses are already investing in resilience. Countries are seeking new trade partnerships. Technology continues to improve efficiency. The coming years will test how well the global economy adapts to uncertainty. The Strait of Hormuz is more than a geographic location. It represents how deeply connected our world has become. A disruption in one